dollar amounts we invested in Starwood and the music? Just
Yeah, sure.
For the song?
So GVF's $200 million fund. So you would have had about $10 million in Starwood. Again, so this smaller liquid company, I think one of the benefits of GVF is we find these great trades, investments, but we can't put $100 million into them. I think that's one of the things that we're very determined to do, is to stay small and nimble. But we can find $10 million worth of stock and something that's, we think, very much at the wrong price. We just have to be patient. And that $10 million we would have bought over about 2 or 3 months. Very kind of meticulous, stick to your level, hang out your shingle every day.
What's that percentage?
It's about 5-6% of the fund. And then in terms of these two, it'd be similar sorts of numbers. I think Round Hill, we probably had about $5 or $6 million invested, and Hypnosis Song, it was north of 10 again. And as I said, it was a test of conviction towards the end there.
We absolutely didn't think it would be a case study for this presentation.
No, we thought it'd be 3 years from now, I would say.
In a couple of years' time, but
yeah.
It was a good one.
Yeah, but a typical investment, it's a great question actually. A typical investment, we like to take high conviction investments. We do a lot of work on the underlying, and we don't want to waste that work. So normally we'd invest about 5% of the capital in the fund in something we're excited about, and that's about 10 million Australian dollars. Hey,
Miles, there's a lot of things that fascinate me about the success of Global Value Fund, but one of them is wondering, how do you know that these things exist in the first place? Like, how do you actually know about hypnosis or sweat? And then why do you start looking at it? How do you know that perhaps here is an opportunity? Like, there must be so many millions of things. How do you find one?
That's very kind to say, Phil. Thanks. I mean, I guess...
I can give you a bit of an insight as
Okay.
an outsider. And Miles, you can add to this for sure. But having watched the guys now for about a decade, so they meet everybody at IPO. And I remember specifically Song at IPO, because it's a long story, but I was sitting down with an HSBC private banker who one of our clients had asked us to see, and she was going on about how exciting the Song IPO was and got to get involved. And I remember the guys, they had the meeting with the Song IPO, and the guys come round and they've got their pitch, and these guys are really good. They listen to everything, they write the notes, they start the model. The model starts on that day, the day that the IPO comes round. That's when the guys will start monitoring it in the system. And of course, I'm all excited. I'm like, oh, those IPOs, that Song IPO sounds so great. Miles is like, just give it some time. Give it some time. And so they build these portfolios and these like systems, and we have reams of them, folders and folders of companies that they have identified in our universe. And remember, the universe that we are operating in is what, $500 billion?
$500 billion, but there's probably, they're not millions of companies, there's probably thousands.
Yeah, there's probably... Exactly. So probably thousands, and then they meticulously just follow them. They build a due diligence over time, depending on whether it gets interesting or not. Sometimes it gets a little bit interesting, so they do a bit more due diligence, but then the price moves away, so they kind of step away from it. And they keep this knowledge base, which they've ultimately been building since the late 90s with James and the previous firm that Miles worked at. They build on that knowledge, they keep the information, and then it just hits. We have monitors that show us, oh, beep, 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 this has come into range, or this is interesting, or have I described that?
No. Emma's done a great job in kind of setting out the way it works. And I think the other thing to say is we run, we've got a really interesting kind of boutique strategy. It's very hands-on. We have a lot of investment managers for the relatively small amount of money that we run. There's 4 of us in the investment team managing $300 million, which is not a lot. In sort of more traditional funds management, you'd have a senior PM and a junior PM running billions of dollars. So it's a very hands-on strategy, and we spend all day, every day. We're kind of math geeks. We love it. We spend all day, every day turning over stones.
And there's a lot of frogs.
And there are a few frogs, yeah. G'day.
So what percentage of those that you investigate become fruitful?
Well, at the time, I'd say it's less than 1 in 10. Something like this we'd done lots of work on since IPO, but it wasn't until 3 or 4 years later that work got put into practice. So There's a lot of, what we like about doing is the things that we invest into can be very cyclical. And I like to say everything kind of has its day in the sun and everything has its day in the doghouse. So we'll do a bunch of work on something and it's not an interesting price, but we'll save all that down. And often enough, a couple of years will go by and bonds are out of favour, or Brazilian stocks are out of favour, or music royalties are out of favour. And it becomes a very interesting kind of place to look.
Another question on Song, which is not about investment, but
Yeah.
the decision to release to the market the change in NTA.
Yeah.
So that announcement sort of suggested the board had asked the manager to release that. Is it sort of triggers that you guys sort of go, well, mid-month we feel like there is an NTA in place, or was that like a one-off decision?
Yeah, it's a great question. So, we do an NTA once a month. We are, a relatively small team, and doing the NTA probably takes us half a day as a team. So it's a big chunk of our time that we could be doing elsewhere. So we've taken the decision, we do it once a month. We, touch wood, run a relatively stable kind of process. And if you look at our returns over time, they kind of hopefully just gradually keep going, grinding up. So we feel that once a month, nothing's really changed enough to sort of warrant updating the market. We do occasionally release those mid-month ones. We've done that, I think, 3 or 4 times.
COVID, we did that.
Did that in COVID. So when markets fell enormously and we hadn't fallen as enough, we felt it's time to actually look, guys, just so you know what's going on, the portfolio's held up a lot better than the market. That was probably the last one before this one. And then this one, because it was such a meaningful position, share markets were down a lot, yet our portfolio was up a lot. The board felt that it would be sensible to just make sure the market was fully informed.
Yeah, so more than 5% difference. Which was remarkable for us.
We don't have like a formal policy where it says X, Y, and Z. It's more the board, pretty sensible people, and it's a one-off decision.
So how closely the board involved? Because that was like the day after the buyout, right? Like, was that you basically emailing them saying we've had a fairly significant change, or?
Well,
or was it actually a board meeting that day?
No, well, so it's a great question. For my sins, I kind of have a foot in both camps. So I'm on the board. And I'm obviously the portfolio manager, so g'day, thanks. I'm clearly aware of these things. So as soon as I saw what was happening to the portfolio, it was just an email conversation with the directors. I said, look, this has happened. We think it makes sense. The board said, yes, that's entirely sensible. Let's do that. Yeah. Sorry.
Do you see a point in the future where you would like more capital in the fund?
Yeah, we're on record saying this is a niche kind of boutique strategy. And we're also on record saying we think the best size for GVF ultimately, if shareholders want to take us to that place, is about $300 million. We started at 50, we're about 200 now. So there's certainly capacity to grow. And I think in getting up towards that 300, we've thought a lot about that number. I think at that size we'll still be small enough and nimble enough to kind of exploit all these things we find. But it will also help with some liquidity in the stock and help drive down the cost. There's some fixed costs in the business. So we certainly would like to see it grow over time. We're in no rush. We're also incredibly sensitive to looking after shareholders and making sure that we do the right thing all the time. So we would never raise money at a discount to asset backing. We've done 5 or 6 capital raises since launch. They've always been at NTA or at a premium. At the moment, frustratingly, we're at a small discount, sort of 5 or 6%. But if we were to get back to parity, I think the board would be open to that, and certainly we've had some kind comments from shareholders that have said they would be interested in giving us some more money. So certainly nothing to do today, but one day if the stars aligned, then yes, I think we would.
And it's worth mentioning, obviously, you guys are probably more aware of this than anything, but the LIC industry and the structure that we're in, the listed investment company structure, it is going through a bit of a consolidation phase at the moment, and we are seeing discounts across the Australian market, whether it's AFIC or Argo or some of the really big names trading on discounts. And I think that is, my personal opinion is that has a little bit to do with maybe the rationalisation of the industry. And I think we have been affected a little bit by that. Historically, just for your information, since our IPO 10 years ago, historically we've traded at a 2.5% to 3% discount.
Averaged across
the whole time. So we've tended to trade very close to our NTA, but I think at the moment in particular, we're seeing bit of a wider discount. Also the fact that our NTA is actually worth almost 130, which is a function of
We've had a great run of performance, and
Yeah,
the share price
it's-
possibly hasn't kept up.
exactly. The share price maybe hasn't kept up as much, but just to put that on your radar, that we are at a little bit of a discount at the moment.
Cheap buying.
Does that beg the question, Miles? How do you capture your discount?
Yeah, no, it's a fantastic question. I mean, look, there isn't. Investing in an listed investment company, I think it's a tremendously. It's got a great place in the market as a corporate structure. You have a board, a company. It's a living, breathing entity as opposed to a trust, which is just a legal document. It can't move and change as times change. An investment company lets you smooth dividends, franking credits. There's all these great reasons for it. But one of the features of it is one of the features we like is that these things can often trade a long way away from fair value. There generally isn't like a magic solution to solve these things. You can obviously, in extremis, wind them up, but it's a pretty nuclear option to take. And you want to make sure that there's no going back from that. Is that what shareholders really want? The way we've always approached it, and there's sort of the holy trinity that we absorbed from Jeff Wilson, which was performance. You have to be generating performance really to justify taking in a sticky pool of capital from shareholders. And to come back to Emma's point, I mean, there's been a lot of, I think the listed investment company structure has been a bit of a whipping boy in the Australian market for a while now. And I think part of that is there a lot of new products came to market, and a number of them, not all of them, but a number of them didn't really live up to the promises they set out. Their performance didn't match what they said they'd do on the tin. And we're going through, as Emma said, a sort of a rationalisation phase at the moment, a consolidation phase. So performance has to be there. I think for the target audience, that a high and consistent and hopefully growing dividend stream is also very important. And then the last bit is marketing, getting out there. Your shareholders own the company, getting out, seeing them, and making sure that they're engaged and excited about the experience as well. In the case of GVF, that formula's generally served us really well. I mean, we launched at $1. We've paid out over 80 cents on that dollar to shareholders over that time. We've just announced a special dividend for next year, and plus we're paying, we should be paying a very high yield next year as well. So historically, that formula's worked really well. We've never had a serious discount problem. Like the discount's never gotten wider than 10%. It's always been single digit. And the premium's been as high as 10% in the past as well. So I think if you invest into this structure, you need to do so with your eyes wide open and understand that it will move around through time. That's one of the trade-offs that you're getting for the dividend security and perhaps a different kind of investment proposition than you would normally get. And a large part of it comes down to trust. If we had a big persistent discount we couldn't solve, we would be the first people to put our hands up and say this has to be fixed. But there generally aren't sort of quick fixes outside of winding a company up, which is, look, at the end of the day, if people don't want us to manage GVF, we'd never stay in the way in that, and shareholders can remove us these days with a simple vote. So, I don't have a perfect answer for you, but hopefully that gives you some insights.
I don't think you've ever hedged the US dollar. Is that your view going forward? And it seems to work for you. So
Yeah. I mean, it's a tough one. I think as a team, we try and stick to what we have high conviction in, which is our skill set is finding cheap assets around the world, whether they're portfolios of bonds in the US or music royalty catalogues in the UK, and unlocking the value from them. That's what we can do really well. We can't and don't add any value trying to call currency markets, and I always am a bit sceptical when I see like a stock picker get up and talk about the Swedish krona or the New Zealand dollar. It's a very different game, and most of the research shows that nobody ever calls currencies consistently and makes money out of it. Anyway, that's my kind of view. So instead of trying to call currency markets, what we do is we just have a template of currency exposures that we try and make sure we're matched to. The US dollar as a sort of an asset class is by far the biggest source of places to invest your money. It's the biggest capital market, so it generally makes up about half of the investable universe, and without trying to manage things, we generally end up with about half of the portfolio in US dollars. What we do outside of that is, as Emma said, just make sure the portfolio is very diversified, and whilst at times that might go against us, we've had times going for us. And over the life of the fund, it's really just been random noise. We benefited a lot at the IPO time when the Aussie dollar was really overvalued, and probably one of the few times we were comfortable taking a view. But since then, we've just kept a very kind of diversified, low-risk basket and focus on what we can do well, finding cheap assets.
The share price you've got there in the chart for Song
Yeah.
took a very
vicious uptick there,
Oh yeah,
the biggest one that's obviously in its history.
yeah.
You know what the underlying cause for that was? And it looks like April, and how's that gone in a few weeks since then?
Well, so that was what I was trying to illustrate. So maybe I didn't explain it well, but takeover bid. So we were buying all the way down. Concord, a group that had actually bought out Round Hill, came along and made a takeover bid at a big premium, and that kicked off this bidding war. If you can see the little dots on the way up,
Yeah.
first dot was the first takeover bid. Then Blackstone, the private equity group that we felt were trying to take the portfolio away from us on the cheap, finally paid a decent price. Then Concord came back, and then Blackstone have just come back again. So it's been a tremendously quick kind of sequence of events, and yeah, has really helped GBS returns over April.